Let's now delve into Nvidia stocks. Volatility is sending us very serious signals, especially the trading volume in options. We see a huge wall. Also, we'll touch upon the volatility smile. I want to tell you about many interesting cases. Let's begin. From the very beginning, Nvidia's stocks dropped by 3.5% today. Over the past year, they have grown very strongly by an insane amount, almost 600%. This is of course a lot. Currently, we are experiencing a correction. All of this is related to artificial intelligence. Everyone has probably been following. I won't go into detail. I won't dwell on what caused this stock to rise. The most interesting thing is what will happen next and where it will go. I've already touched on previous videos. My opinion on this stock remains unchanged for now. Let's start with volatility and the options market. I want to say right away that the options market and the derivatives market have a very strong impact on this stock. The trading volume in options is very high, and the stock rises and falls more because of options than because of other factors. Therefore, we need to pay attention to volatility. Initially, volatility remains in the same range, like it was around 5.5% of the strike. I remind you that different strikes, different expiration dates naturally have different volatilities. We'll need to pay attention to that. Volatility is currently not increasing because Nvidia is essentially in a sideways trend. It rises by 12%, then falls by 12%, but essentially over the past month, Nvidia hasn't grown anywhere, and now it's approaching a very important level at $850. If it breaks this level, we may see a significant downturn. But again, we'll talk about this a little later. Therefore, after breaking this level, volatility may also start to increase significantly. Let's look at the volatility smile. Here, the volatility smile reflects not only the level of volatility but also the strike price. As we can see, when it comes to growth, i.e. towards calls, volatility does not increase. It remains a flat line, therefore investors are not betting on any sharp rise in this stock. But when it comes to the downside towards puts, volatility will start to increase significantly. I would like to draw our attention to that as well. Let's look at the historical implied volatility. Currently, implied volatility is above historical levels. I remind you that sooner or later, any volatility returns to its historical values. From this, we can draw the conclusion that sooner or later, volatility will decline. And I've built a strategy based on betting on the decline in volatility. Again, professionals don't know where it will go. It may start growing upwards or start growing downwards. They use other metrics, for example, the decrease or increase in volatility, and I always want to tell you about and explain it. But at the moment, building such a strategy is risky because volatility can actually increase if the stock continues to fall. Let's touch on the volume of options in the market. It's worth noting that we have a very large volume of institutional buying at the $900 level. This is very serious, it's a lot. We also have a very large volume at the $1,000 level, and in general, very large volumes in call options. In put options, we have a very large volume at the $850 level, and I would like to draw your attention to this. Also, all this volume is institutionalized in weekly options, so all options will be in the money. Let me also tell you how delta neutral hedging works. I've already talked about this, but I'll repeat it again. When you buy a call option to make money, there is always a counterparty on the other side. Usually it's a market maker or some funds that need to exit their positions. They sell options, but they primarily earn on commission. To avoid losses, they start buying stocks. They buy stocks according to the delta. There's a strategy called delta neutral hedging, where they buy as many stocks as the delta indicates. For example, if the delta is 0.5, they buy 50 stocks for every option sold. But if, in rough terms in our strategy, this is dynamic, if the stock is rising, they have to buy more of these options to hedge because as the asset rises, so does the delta. Therefore, if the stock starts to fall now, if the stocks start to fall, then all this hedge, all these bought stocks will need to be sold by the market maker, and we might experience a cascading drop. I would be very attentive and closely monitor the end of the week, as what will happen on Friday can determine a lot for us. Also, these options can be postponed to the next week, as it usually happens, but sooner or later I can tell you for sure that the money will run out, and this situation will need to be let go. So before we return to stocks, I would like to show you the 3D volatility. Here we have all the information concentrated on strikes, expiration dates, and volatility. Professionals will immediately understand what I'm talking about. I will discuss 3D volatility a little later in my upcoming videos. Let's get back to stocks. Based on options and derivatives, I can assume that the stock is either approaching its end or has already completed its upward movement. I understand all the arguments. I agree that the stock is very good. I agree that the stock is profitable and very promising. Artificial intelligence undoubtedly changes the world. All this is good, but I want to tell you, explain that it does not always affect the pricing. If market maker derivatives start selling, then no artificial intelligence will help because we will simply see huge volumes of sales. I cannot say that the stock will start falling right now. Maybe it will still consolidate. It is quite possible that it will take more time to unravel all this volume of earnings, but again, this could happen as soon as next week. I'll remind you of my philosophies. I don't know where the stock will go. I can't predict price movement. My main task and skill are to strategically position ourselves. We need to construct a portfolio in such a way that no matter where the stock goes, you earn. Regarding stocks, we have probability theories and mathematical portfolio management. Why? Because the risk to reward ratio is not in the investor's favor. Again, I'm not saying the stock can't rise. I fully acknowledge it could rise to $1,000. But again, the risk to reward ratio isn't in your favor. This means you could lose much more than you could gain. It's just mathematics. But I can't recommend buying or selling these stocks. I think for yourselves. I'm just saying what I see. Let me come up with an interesting strategy on the stock. And again, I want to stress, do not follow this blindly. If you do, you will definitely lose money. I guarantee it right now. We have many strategies. Let's look at one of them. It's very primitive, of course, but look, no matter which way the stock goes, if the stock is growing very strongly, we will make money. If the stock starts to fall, we will also make money. If the stock consolidates, yes, we may lose a little. We'll punish this strategy. It needs to be supplemented. Never repeat this after me, because this is a position. It needs to be managed. It needs to be hedged. Absolutely need to buy, need to sell. I showed you this solely as an example of what logic we have for building a position and a portfolio. What can be earned if the stock, for example, is expected to rise or fall? Let's continue. I've already said that the risk-reward ratio is on the investor's side, and I also assume that the growth potential is already limited. I can't say if it has reached its peaks, but I assume that sooner or later it will. The stock is likely to fall significantly before starting to rise again and conquer new highs. Without a doubt, a correction should occur before it resumes climbing to new peaks. I believe in this. I think it will happen, but it's a very good buying opportunity. I also remind you that soon, when I get monetization on YouTube, I will redirect all the monetization money to a new account that I will open, and there we will build an entirely new portfolio from scratch. I will show you which stocks I buy, which strategies I use, everything from scratch. You will see how to form positions skillfully, how to build a portfolio skillfully. As soon as I get monetization, we start this experiment immediately. Everything will be as open as possible, as public as possible. I'll show all the accounts, I'll show all the stocks I buy. Also, of course, we'll pay attention to reports. We have other semiconductor companies starting to fall. Let's see how this all ends. Semiconductor is, of course, a very strong sector, but if these stocks start to fall, they can drag down all the other indices as well. I also advise you to watch my previous videos. There, I also gave forecasts, explained why buying at the moment is not the best, but in the strategy, it all makes sense. When I record this video, stocks are only falling. I advise you to manage your strategies and positions skillfully. Good luck to everyone.